Hello, everyone, and welcome to the Morgan Hill Real Estate Market Analysis for January of 2010. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. I'm also the president and CEO of Whitelaw & Sons Real Estate Services, serving all of the Silicon Valley area. Now, there are a variety of ways to get in contact with me. Probably the best way is through my website at www.soldbyrobert.com. There you'll find an excellent multiple listing service search tool that'll cover everything from San Francisco all the way down to Monterey Bay, California. You'll also find articles I've written on real estate, plus my weekly podcast on real estate entitled Real Estate Realities with the Rebel Broker. If you'd like to get in contact with me directly, you can send emails to robert@soldbyrobert.com. If you prefer to call directly, just dial 408-852-0525. And if you'd rather use one of the popular online messaging software like AOL Instant Messenger, Google Talk, or Yahoo IM, the screen name is The Rebel Broker. And if you're a Skype user, the screen name there is simply Rebel Broker. Now, referrals are always appreciated. If you or anyone you know is interested in buying, selling, or investing in real estate in the Silicon Valley area, please feel free to get in touch. And if you are not interested in properties that are in the areas I serve directly, I can still help you find the right agent for you no matter where you are in the United States. Just get in contact with me using either of the ways I've outlined above. Let me know what you're looking for, and I'll find the right agent for you. Now, let's go ahead and take a look at the supply and demand numbers for Morgan Hill. We'll start off with the inventory numbers. We can see that things are in a decline right now as far as a year-to-year comparison is concerned, and that's good news. Inventory is down 34.66% in Morgan Hill. That's 87 fewer homes on the market in 2010 than in 2009. Remember, this is just the month of January going all the way back to 1999. We're approaching inventory levels that are right around 2002, 2003 type numbers, but at least we're way down when compared to the last 2 years. That gave us a grand total of 164 homes that are on the market. As far as new listings are concerned, that's also down from the same time last year, which is good news. That's 25% lower than last year. That's 18 fewer homes on the market in January of 2010 than at the same time in 2009. That gives us a grand total of 54 homes that were listed in Morgan Hill in January of 2010. And as far as sales are concerned, that's also headed in the right direction, but not at the pace I think we would hope when comparing it to previous years. You can see we had a pretty marked increase from 2008 to 2009, but we only got one more house sold this year than last year at the same time. That gave us a grand total improvement of 6.67% and a total of 16 homes sold. Excuse me. Now let's go ahead and look at how many how many months worth of inventory that comes out to. Now what we do is we divide the inventory by the total number of homes sold, and that gives us a little over 10 months worth of inventory. That number stands at 10.25, and that is not particularly good. We'll see how that pans out when we take a look at past months, but that ratio is actually a dramatic decline or movement in the wrong direction from last month. It's fairly good when compared to last year. That basically means we have a little over 10 months worth of inventory on hand. If everything froze where it is now, it would take us 10 months to sell everything. Another way of looking at that is to think of it as a competition index. For every home that's sold, there were about 10 homes on the market. Now compare that to last month's ratio of 3.04. Last month, we sold far more properties. We only had 3 homes on the market for every one that sold. That's considered a buyer's market. This is a dramatic shift from one month to the next. Now, we can't call this a trend yet. A small enough homes sell on a month-to-month basis in Morgan Hill that you can't really call a trend just based on 1 month's numbers. But we've actually got a few numbers that are playing into this month's statistics that are a little bit concerning, and we'll get into all those in a moment. Now, if we compare this to the county, Santa Clara County in January's ratio was at 4.78. So we are definitely not even performing really up to the average for the county right now as far as a month of inventory is concerned. Now let's go ahead and take a look at the same data. Now we're just looking at months going straight back. We're not skipping just to January. So this is going all the way back to July of 2008. You can see that the inventory numbers are in a steady decline. We've had a little bit of a boost here in January, but that's relatively normal. You normally get a jump in the numbers between December and January. We saw that last year. But if you'll notice, it's a more dramatic increase this year. If you look at it last year, it was a little bit more of a mild jump. This year, it's a much bigger jump. It's a little bit of a concern to me. You never know if that might indicate we're seeing a pivot in what the market's going to be doing. One thing we do know is there are an awful lot of foreclosure properties that have yet to go on the market, have yet to be counted in our inventory, and that's a concern. Now, the inventory jumped 14.69% between December and January. That's 21 more homes on the market in January of 2010 than December of 2009. If we look at the number of homes that have listed, that's also gone up, but that's also normal for this time of year. We're seeing, it doesn't look like it's dramatically more as far as how the 2 months relate to each other. It doesn't look dramatically more than we saw last year between December and January. So about the same performance as last year. It's actually up 116% when compared to December. That's 29 more homes listed in January than in December. But again, it's normal to see that sort of an increase between December and January. Now, as far as sales are concerned, we've had a dramatic drop in sales. We normally get a drop in sales. Last year, we got a similar kind of a drop. This is a little bit more drastic than last year. It's actually down 65.96%. That's 31 fewer homes sold in January of 2010 than December of 2009. In general, the trend is up, which is good. All of these trending lines are going the right direction, but I'm a little bit concerned at the rate that some of these things are changing. We'll see if this trend continues over more than just this month, but it's definitely something we want to keep our eyes on. Now, let's take a look at the short sale and foreclosure numbers, and this is another reason why I'm a little bit concerned about how the market's shaping up moving forward. Now, you'll see we've had a pretty dramatic shift from how things went last month to this month. Now, last month's numbers had actually been pretty consistent over a period of time. This month, we've seen a dramatic increase in the foreclosure sales. You'll see that here in a moment. Now, we have about the same percentage of homes making up the short sale marketplace. Foreclosures really jumped. We saw foreclosures jump to comprise 38% of the total homes that sold in the market. And that's a little bit of a worry. Conventional sales are now down to 31% of the overall homes that are selling, down from 51% last month. My feeling, though, is that there are so many foreclosure homes still waiting in the pipeline. We have a ton of foreclosure properties that aren't even out there yet. But foreclosures are really starting to mushroom. Interest in them is still very high. What's interesting is it's very competitive, believe it or not, for some of these foreclosure properties where we're seeing multiple offers coming in on some of these. It'll be interesting to see what happens once we get these foreclosures on the market that aren't, to see if that depresses the price or whether there's enough buyers out there to absorb the foreclosures that meet the marketplace. We're seeing a lot of foreclosures actually selling for higher than asking price. My feeling is that some of these prices are artificially high, so we'll see how that pans out in future months. But what it broke down to was we had a grand total of 16 homes sold. 5 of them were short sales, 6 of them were foreclosures, and 5 of them were conventional sales. Now, if we take a look at home prices, this is, again, just looking at past years, so just the month of January, the average home price was down 2.59%. That's a $19,437 decline from the same time last year, so relatively flat, really, compared to last year. The average home price stood at $730,656. The median price stood at $587,500. You can see that our median price actually went up just a little bit when compared to last year. That's an increase of 5.86%, or a $32,500 increase. So what does this tell us? Well, when we saw the median price go up a little bit, that tells us that half the homes that sold were above that median price and half the homes that sold were below that median price. But the average continues to be above the median. In fact, the median was lower last year, but the average was higher last year than the numbers we're seeing now. So those two are moving a little bit away from each other. That's actually okay. What it tells us is that while the average price indicates that there were a couple of properties that were the very high end that sold that artificially brought up that average price, the majority of a higher number of homes were selling below the median or far below average price. So it just kind of communicates to you that the activity, most of the activity, is still happening at the lower price points. Now, as far as the highest price single-family residential home in Morgan Hill that sold in January of 2009, that goes to 16367 Reynolds Drive in Morgan Hill, and that property sold for $2.5 million. It was originally listed for $3,495,000, and that was on the market for 207 days. Now, the lowest price single-family residential home was 288 West Edmondson Avenue in Morgan Hill. That sold for $385,000. Its original list price was $367,900. and it was on the market for 49 days. So that property actually sold for above its original list price. Here's an interesting number for you. It sold in April of 2007 for $600,000. So it's taking a substantial cut from what it sold for just a couple of years ago. Now, the average price per square foot in Morgan Hill stood at $276.46 in January. Last month's price per square foot was at $272.02. Now, let's go ahead and look at home prices and see what direction they've been going for just over the past months. Now, again, you can see that the average trending is down. More recently, things have been spiking a little bit. The average price increased 6.39% between December and January. That's a $43,880 increase. The median price declined by 0.42%. That's a $2,500 decline. Now, you can see that from month to month, really, since November, we have seen no change in the median. Which basically tells you the activity, where the activity is happening. Half the homes were priced below the median, and half the price were, if 100 homes sold, 50 of them would be below that point of median price, and 50 of them would be above that point. So really, the average price is just sort of giving you an indication of where activity has been going on for the higher end homes. Now, you can see in November, all of the activity was really focused down at the lower priced properties. We even had the average price coming in below the median price. Really big jump in December and again in January, indicating that we sold some properties at the extreme high end. The $2.5 million property I just told you about is clearly the one that's influencing the average price this month to a higher level. But this does not communicate to sellers out there that they should be shooting for higher prices for their properties. It might encourage some folks who are trying to sell properties at the higher end that there is activity at that level, but no one should be out there thinking they should be raising the average price or the price of their property based on any of these numbers. Things are really not reflecting that sort of a market out there. All right, now let's take a look at how many days it's taking to get a property sold in Morgan Hill. You can see, again, this is just comparing to the same time last year. Last month, it was taking 134 days to get a property sold. This year, in January of 2010, it's taking 106 days. That's a 20.9% decrease from the same time last year. That's 28 fewer days to get a home sold. But I don't like to just give you these numbers because I think they can be misleading, particularly in smaller communities where these numbers can easily be skewed by just one or two properties that have been on the market for an extremely long time. Now, the lowest days on market was 3 days for Morgan Hill. The longest days on market were 495 days. The next closest highest was 432. So that sort of illustrates to you some of these high numbers up there that can really push these numbers up. Now, no home sold in 0 days, meaning they sold before they went into multiple listing. 1 home sold in the first week, 1 to 7 days. 6 homes sold in 8 to 30 days. 4 homes sold in 31 to 60 days. 0 homes sold in 61 to 90 days. 2 homes sold in 91 to 180 days, and 3 homes sold in 180 days or more. Now, to sort of break that down, 43% of the homes that sold in January did so in 30 days or less. So in general, it's actually still pretty good news. It's actually better news than we've seen in some previous months. If your home is priced right and it's being marketed correctly and it's being presented well, there's every chance that you're going to, almost a 50% chance that you're going to get this property sold relatively quickly in 30 days or less. So the market's still out there to get things moving. My personal opinion is on folks I'm talking to who are thinking about selling their homes in Morgan Hill, you have to do it now. I don't think that this market's going to last. I think that we're going to see a time in the very near future when more foreclosures hit the market and we will see just an inventory that tends to shoot up, and as a necessary correlation to that, we'll see average prices go down, and not just in terms of statistical analysis, but in real terms of what it takes for you to get your home sold. You'll have to drop your prices lower. So if you have to sell, if you can't wait for a few years to get your property sold in Morgan Hill, you need to do it now, and you need to do it before. You need to get your home on the market as soon as possible is the bottom line, and you need to really focus on getting that thing marketed right up through the summer season this year. Okay, now days to sell just in past months. Again, this is now not looking just at the month of January, but looking all the way back to July of 2008. You can see that things have been relatively flat since September. Not a whole lot of change. We're down a little bit from December. But really nothing that's any statistical strangeness here as far as any dramatic increases or decreases. I think what this basically tells us is, despite the fact we had a couple of properties that sold in excess of 400 days this month, that as we run through this process of cleaning out some of these older properties that have been in the market for an extremely long time, and sales increase, this is the normal number, the normal range, the 100 to 120 day range to get a property sold is sort of settling in as normal here. I don't expect to see any big change in that. I think what could happen is as we see more properties come back on the market that have been through the foreclosure process, I think we'll just see this number start to increase, but we'll have to see how the market pans out and see if that actually ends up being what occurs. Now, this is the layout of where the properties are being sold. We're not seeing any strange distribution here. We had one home sell up in Holiday Lake Estates up near Lake Anderson. It's interesting to note that we didn't have really anything sell downtown, which is a little bit strange. We usually get at least a couple of properties that sell downtown. And we had more outlying properties that are west of Monterey Road, more into the mountains, that did get sold up past Watsonville Road, up on Uvis, those types of properties. It's folks out there looking to take a deal. Some of these properties are at amazing prices right now. But even having said that, even understanding that these prices are low for this marketplace, they're even a little bit higher than they should be just based on the artificial competition we're seeing because of the low inventory while banks don't put their foreclosed properties on the marketplace. So try to take all of that into account in whatever decisions you make. If you're trying to sell, I think that you're in a position where you need to do it now. If you're a buyer, I'd suggest you start looking now, but don't feel that you have to any sense of urgency to beat out those other folks that might be making offers on properties. Don't get caught up in a bidding war over a property, because I really believe that we're going to see a whole lot more of these properties hitting the market coming up in the next 3 to 6 months. So go out there, shop for what you want, find what you like, and if the price works out well for you and it fits within your budget, between interest rates and what's offered out there for sale, I don't think any buyers are gonna kick themselves in 5 years for having bought any houses right now. But I wouldn't be surprised if in the short term, in the next 1.5 to 2 years, we see folks who buy now that end up seeing a decline in the value of their property, but that then see some recovery within about 5 years. But that's trying to estimate what's going to happen that far out is a little bit too much like looking into the crystal ball. So we'll keep our eyes on what the market does, and hopefully we'll get some better information as we move along as to what direction we're going. Now, I hope this has been valuable information for you. I appreciate you taking the time to listen, and the goal here is to get you as well informed as possible on what the market's doing. I won't bore you by reading through all the ways to get in contact with me. Again, I'll just put them up here so you can jot them down. If you'd like to get in contact with me, feel free to do so using any of the methods I've outlined here. Again, thanks for listening, and I'll talk to you all next time.